All right, on the 1040EZ, that line where we had to subtract the 9,700 if they were single and the 19,500 if they were married filing jointly, that line on the 1040EZ takes into account two things. It takes into account exemptions and deduction, standard deduction. On the 1040A versus and the 1040 A is still considered a short form. You'll have the deduction and the exemptions are separate sections, and that's because with the 1040A you can have dependents, whereas on the 1040EZ you could not have dependents. You could only be single or married filing jointly. With the 1040A, anybody can use a 1040A. The only restriction on the 1040A is that you don't itemize your deductions. And itemizing your deductions is where you list all of your deductions instead of taking a standard deduction. And we'll go over those when we do the 1040. Okay, so if you have a child, you can't use the 1040EZ. You have to either use the 1040A or the 1040. You only use the 1040 if you've got other forms that need to be attached. With the 1040A, I'm going to write that over here. 1040A, you can have only a Schedule B attached. Or Schedule B, or you can have the earned income credit. There's just a couple of things, whereas the 1040 allows you to attach like every possible form. Let me look at the 1040s real quick. Schedule B. You can do a Schedule B. You can do an 8917. That's for tuition. You can do a 2441. That's for elderly dependent care. You can have a Schedule R, which is for disabled. You can have education credits, 8863. These are the HOPE or the lifetime learning credits. Retirement savings credits, which is an 8880, are allowed. Child tax credit, which is an 8812. And American Opportunity Credit, that's the same form, 8863. So these are the only forms that you can attach, okay? With the 1040, just 1040, you can attach any form. And remember I mentioned that there are like 100 different forms for 100 different reasons. On the 1040A, you're limited. Okay, so this is the form we're going to fill out now, is the 1040A. And we've got Kenya and Robin Omar. So we're going to put them in first, and assuming so we've got Robin and Kenya Omar. They'll have some sort of social security number, which we're not privy to, and address and everything. They're married filing jointly. Okay. And they have one child. Now, we didn't get the child's name, but the child's name and social security number will need to go on the real tax form when you're filling out your actual taxes and you have a kid. So they were very creative, and they made their kid. Yeah, Kid Omar. He's their kid. All right. Now, if the child is under 17, qualifying for child tax credit. This might be that thing that your mom was being told about, child tax credit, that there's an age limit on that, but that's not the same thing as dependent. Okay. So we'll just go ahead and click this. Now, you've got yourself and your spouse and your child. You've got yourself and your spouse, that's two people, and a kid that lived with you, that's one person. That's giving you a total of 3 exemptions. So you get one exemption for each person in the household, that's being claimed on the taxes. So you, your spouse, and your children. This number is very important because this number comes up later on and it gets deducted from your income. Not just 3, but when we get to that part. This is relating to that number that you do when you fill out your W-4 when you get your job. So like technically they could claim 3 on their W-4, but maybe they don't claim 3, maybe they claim 1 or none, or maybe they do claim all 3. Yes, on your W-4s you sure can. That's what I do. And they take out more taxes, but that way I know I'm not going to owe money at the end of the year. And I get it back. Okay, so we've got this part done. Now we need to go to their wages, salaries, and tips. So we've got that Robin's wages are $65,120.97. And then on the next page we have Kenya's as $52,126.76. So I'm going to add those two together to get their total wages. So what? Helps if you hit the right buttons on the calculator. So their total wages is $117,247.73. Okay, so those go together on line 7. Okay, that's their total wages. The next line is taxable interest. That is bank interest. Now, it says to attach Schedule B if required. We haven't really talked about Schedule B yet. Okay. Schedule B is required for one of 2 reasons, okay? Let me go to this next page. Okay. You have more than one source of interest or dividends, or more than $1,500. Okay, if you're over $1,500, or if you have more than one source, so like interest from 2 banks or stock dividends from like 2 or 3 different companies, then you have to attach Schedule B. Now we're not being told that on here. They're only getting 1 bank interest and 1 stock dividends, so we don't have to do a Schedule B for this. So we're going to go and fill out their bank interest was $987, so that goes right here on line 8A, 987. And ordinary dividends. Ordinary dividends are their stock dividends, which is $1,200. Okay. And again, we're not having to fill out the Schedule B because they're only telling us 1 source. We're not being told there's more than 1 source and it's not over $1,500. Okay? Now, we have all these other things that can occur as well. You can have capital gain distributions, IRA distributions, pensions and annuities. These things are if you've already retired. So you won't have this until you're retired. Okay. Unemployment or Alaska permanent funds. This is only if you were unemployed and received unemployment, or if you live in Alaska and you receive these permanent funds. Most people don't fill this part out. Social Security benefits. This is if you're retired or disabled and you receive those. So we're not, the majority of the population doesn't have to worry about this for most of their tax filing. So we're not dealing with those. We're just going to add these 3 things together. So So we add the bank interest and the dividends to our income, and we get our total income now of $119,434.73. Okay. Now line 16. This is if you're a teacher. Okay. And the max you can claim per year is $200. So if you're a teacher and you buy, so this is educator expenses, not educational expenses, right? So this is for a teacher buying things, supplies for their classroom. You do have to have receipts. You have to be able to prove that you did spend this $200. And if you only spend $100, you can only claim $100. If you spend $5,000, you can only claim $200. $200 is the max that you're allowed to claim no matter how much you spend. Okay, IRA deduction, student loan interest deduction. If you pay interest on your student loans, you can deduct the interest. Tuition and fees, you'll get a Form 1098 from your college. Okay, so you'll get a form for that in order to deduct those. All right, so let's go back and look at, they didn't have anything about being an educator or going to school, right? There's no information about that, so we're going to assume that they didn't have that. And so we're leaving this blank. So our total adjustments are $0. What happens is if you do have these things, they get subtracted from your income. So if you spent $200 supplying your classroom and you're a teacher, you'd subtract $200. If you have tuition and fees, so these things that IRA deduction, this is if you're having a, like not a pre-tax deduction out of your paycheck, but you're taking money on your own after you've been paid and putting it into a retirement account. So you've already been taxed on the money, then you can put it in here. Okay? So that's why those things get subtracted from your income. Questions on that part so far? And we bring in the same amount from the front. You just copy it over, so that was 11,9,434.73. So that just gets carried forward. Now, here, if you were born before 1948, you check this off, and if you're blind, you check that off too. Anybody born before 1948 or blind? No? Okay. Married filing separately and your spouse itemizes deductions, you'd have to check that there, but we know that they're filing together, so we don't have to worry about that. Okay, they're not itemizing. Here's the standard deduction. You use this if you're not itemizing. Now, if you're using the 1040A, you're not itemizing. Your standard deduction, if you're single or married filing separately here, if you're married filing jointly here, and if you're head of household here. They are married filing jointly. So it's 11,900. And that number goes right here. Now we subtract these two. So we take their income and we subtract 11,900 from it. And you get 107,534.73. Then exemptions. There were 3 people, Kenya and Robin and Kid. So we're doing 3,800 times 3. $11,400 also gets subtracted from this amount. So now they're down to $96,134.73. This is their taxable income. So what happened is we took, it froze. Okay, it's unfrozen now. So basically what happened is we took all their income, we added up their total income, all their earned income and their interest and their wages, and then we went through, and everything else we were doing were things that could adjust their income down. So IRA contributions or teacher expenses, this is their standard deduction, this is their exemptions for the number of people that live in their household. Those get subtracted and it lowered their income. Tax. Anytime we're looking up the taxes from the tax table. Okay, so we have to go to the tax table now. They're $96,134, and they're married filing jointly, so they're $16,079. So that's their tax, $16,079. Now, if you pay for daycare or you pay for elderly care, you can fill out this form and it'll give you the amount you can put there. That's those two forms. They go there. If you have education credits, there's a form you want to check. If you pay for school, you always want to check this form 8863, like so if you're paying tuition, that goes here. There's like the lifetime learning credit, there's the hope credit, there's like all these credits. But you have to fill out this form and that'll tell you an amount that you can put there. If you are contributing to a retirement savings account, you can fill out a form and that gives you an amount there. If you have a kid, you fill out this form and it'll tell you if you qualify here. So there's all these different forms you can do. We're going to kind of just ignore all those right now and we're going to say 0 credits. Now, credits get subtracted from your tax. That's why they're good. So they come out of your total tax bill because they're like you already paid it. Even though you didn't, they give you credit for paying things that you didn't pay. Now, federal income tax withheld comes from the forms, the W-2s. So we have to go back to the W-2s. And we had... here's the first one, $8,765.99. And then we go to the second one, $6,198.65. And we need to add those together. I lost my mouse. Okay, so I'm going to add those together. That's the tax. That they paid. So that goes on this line right here, federal income tax withheld. That's how much was kept out of your paycheck. You can, if you want to, like when you file your taxes this year, if you think you're going to owe money next year and you're going to get a tax return this year, you can like apply some of this tax return to next year's taxes if you want. And if you did that, you'd fill that out right here. Earned income credit, you have to have a qualifying child, and there's a Schedule EIC to fill out. This one has income limits, and it's right around $40,000 for a family of 3, so I know that they don't qualify because they made $90,000. Those things, we'll ignore that. So their payments were $14,964.64. They paid $14,900, they owe $16,000. They underpaid. So now we need to subtract this number minus this number, and because they underpaid, this is what they paid, this is what they owe, they still have to pay $1,114.36. So the Schedule B, again, if you have more than one account, or you're over 1,500 is when you use this, okay? And it's a very simple form to fill out. You have part 1 is interest. This is bank accounts. Part 2 is ordinary dividends. This is stocks. Okay? And then part 3 is foreign trust accounts. We'll talk about that in a sec. Okay, so if you get bank interest from more than one bank or it's over $1,500, so you list bank name, number 1, and then the amount. Bank name number 2, and then the amount. It's not very formal. You just have to list the names. If you run out of space, you attach a separate sheet of paper. Okay? Then you add these up. So the total goes here. Excludable interest on Series E or U.S. savings bond issued after 1989, you would attach a form there. And if there was excludable interest, you would subtract that. But you'd have to have a Series EE or U.S. savings bond. So you would know if you needed to fill that out. And then there's the actual total, and this is what goes on the line on the 1040. Same thing with stock. You've got company 1, company 2. You've got your amounts, whatever those are. And then you add them together. And you list however many. If you have more than will fit on here, you add a separate sheet of paper. Now for the part 3 foreign trusts, you have to answer yes or no to these questions. Question 7A, did you have financial interest or signature authority over a financial account in another country? So basically, did you have a bank account elsewhere outside the USA? Most people will answer this with no, because most people don't have a bank account in another country. If yes, are you required to file this form? And you answer yes or no. And then if you're required to file the form, enter the name of the country. So if you say yes here, you have to write down, like, you know, Switzerland or whatever the country is that you had the account in. Sweden, yeah, wherever. And then during 2013, did you receive a distribution from, or were you a grantor or transferred to a foreign trust? Basically, did you get a trust from a foreign country? No. Most people will answer no to those. If you answer yes, there's another form that you may have to fill out. And that's the Schedule B. It's very cut and dry. It's a very simple form to fill out. It's not probably the easiest of all the tax forms. Again, though, you only have to do this if you have more than one account, so more than one bank, more than one stock, or over 1,500. So even if it was just one bank, but the was over 1,500, then you still fill this out. Why? I don't know. It seems silly, but you do. Questions on that?